about Starknet today. As you guys can see, Starknet has had a good month with 48.5% up in the last 30 days. So that's actually pretty good. That's actually pretty good. We're going to talk about this though. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. So yeah, like I was talking about before, Starknet up 48% in the last month, 21% in the last 2 weeks, 11% in the last 7 days, and 0.7% in the last 24 hours. But 48% in the last month is really good. The market cap's at 288 million. 24-hour trading volume at 52.4 million, so that's good. Almost pushing 5 cents here on Starknet. But what I really want to talk about today is how I made a video. My last Starknet video was 5 months ago. So as you can see here, 5 months ago, Starknet, only 201 views, but hey, it's something. It's something. But 5 months ago, I made this November 24th, and it says Starknet could continue to dump if it doesn't break out soon. And this is when I was still out inside of Thailand, but I'm back in the United States now. But what this video is pretty much calling out, and also you can also see you can also see the thumbnail here. It says this is crucial because this was a crucial thing I was seeing that it was about to dump. So I went ahead and made the video, right? And in this video, we were at 13 cents. We're at 0.1375. And that was at that support area, but we had just then broken out of that pattern right there. If you look right here, that pattern is called a bearish expanding triangle. And some people can look at it as an ascending channel, but a bearish expanding triangle, that's pretty much what it was, right? You can see it right here, bearish expanding triangle. So we went through that level, and you can see, like, if we didn't get back above there and get back into that channel, then we were going to continue to be bearish. And look at the percent R trend exhaustion here. This is why I always talk about the percent R trend exhaustion. It's still selling off. It's at the oversold range, but it can stay oversold for a longer period of time. And for those of you that always watch my videos, that's something that I say repeatedly. And you can see that it really works, because right after that, you can see how this continued to dump. And look at the percent R trend exhaustion inside of that range. It just continued to sell off and stayed oversold for an extended period of time, or actually a long extended period of time, right? I don't know if I expected it to stay down that long, but it was down, right? And both moving averages, which I didn't talk about this during that period of time, but yeah, both moving averages, the 50-day simple moving average and the 200-day moving average, it went below both of those. And when you're below your moving averages, it's pretty much a super bearish signal, right? Until you're back above those moving averages, you do not look into getting in anything, right? And then the second you see it break above one of the moving averages right here, it was the 50-day simple moving average. The second you seen that was your signal to get back in. But I did not make a video in enough time for this. I almost forgot about Starknet, to be honest. Shout out to the member of the channel, a new member here, Elena. She has joined the channel and suggested Starknet, so that's why I'm going over it today. And guys, if you become a member of the channel, it's only $10 a month. All you got to do is click join, $9.99 per month, and you can have me go over any crypto project as long as it's not a low cap scam coin, and I'll literally do it as soon as possible. That message was 6 hours ago, so this is my next video. So yeah, like I said, go ahead and become a member of the channel, all that good stuff. Now, getting back to the charts though, we are seeing an actual pattern here forming, and it almost looks like another one of those channels, right? It almost looks like another one of those channels. So right now we're going to go ahead and just get right into it. So let's take off all these unnecessary drawings, and we're going to see what type of pattern we're forming up here. Now, one of the things you do want to take a look out for is the 200-day moving average. And the 200-day moving average is this white line right here. And the thing with it is, if we get rejected at the 200-day moving average, we'll continue to be bearish, right? But if we continue to push past it, we have a resistance at 0.0965. So technically 10 cents. We have a resistance around 9 cents to 10 cents, but we'll leave it at 9 cents just to be more accurate. So at 9 cents, we have that resistance, and then we have the 200-day moving average at 7 cents. Now, this kind of almost guarantees us to push. I don't want to say guarantees, because you can't ever say that in crypto, right? But this is a technical pattern that could just end up pushing up to here. Now, whether we break past that 200-day moving average at 7 cents, That's a good question, but we can't really answer that until we get there. But 7 cents, that is the level that we have to target. Then after that, 9 cents, right? And if you look at the percent arc trend exhaustion, it hasn't yet topped out. So I think we're having a bit of a pullback, but I think we're gonna have a continuation upwards after that. If it did sell off, then the white line here, which is the short-term trend, could push us all the way right back down, and then we'll stay sold off for a little while longer. But it doesn't seem like that's the case, because as you can see here, this, I always talk about divergence. This is bullish divergence right here. So we can pull up the divergence chart, and bullish divergence is categorized by higher lows on the MACD and lower lows on the charts, right? That's bullish divergence. When you pull this up, we have higher lows on the MACD, and you can see by this 1, 2, 3, those are the higher lows on the MACD. And then when you look over here, we were creating the whole time, we were creating lower lows on the chart. And then the bullish divergence succeeded and it continued upwards. And what I mean by the bullish divergence succeeded, it was actually bullish divergence. So it like literally just took off, right? So as you can see, the higher lows, as soon as that final higher low hit, that's what I mean by it completed the pattern. Okay. And then you can also see we are now creating another divergence, but we're probably going to get into the process of creating bearish divergence. And bearish divergence is the complete opposite. So it's when you have the lower highs on the chart, which we're kind of seeing right now. You get your higher highs on the chart and then your lower highs on the MACD, which you can see here. Bearish divergence, higher highs on the chart, lower highs on the MACD here on the bottom. And you can kind of see that's what we're actually doing right now. So when you look at what we're doing right now, you can see we're creating higher highs. So we're setting up our bearish divergence. So that's not too good. We shouldn't be setting up a bearish divergence this early inside of the pump. So that leaves me a little bit worried about Starknet and what could happen there, because you've seen how long that the bullish divergence lasted, right? So now that we're building bearish divergence, we might complete the bearish divergence up here and then have a dump. And that's why I'm saying watch out for 7 cents and watch out for 9 cents. If we push past 7 cents, we're going to get back up to 9 cents, right? And I do believe that we should have enough strength to push up to 7 cents at least. So 7 cents is what I'd be targeting for Starknet. That's what I'd be targeting over here, 7 cents. All right. So let's go ahead and also look at the weekly chart. Well, no, there's not enough info on the weekly chart, unfortunately. Some more buying pressure coming in on the weekly chart. So I guess that is a signal that oh, actually no, there is info on the weekly. Sorry, I almost glossed over that. On the weekly, we have the 200-day moving average, and the 50-day moving average is different since it's a longer term chart. The 50-day simple moving average is the red line that I'm marking here, and then the 200-day is the white line. So we could get rejected at the 200-day, which is still going to bring us at 7 cents, or we can push up and get up to 9 cents and then get rejected, and then see if we can continue from there, have a continuation. So it's still 7 cents to 9 cents, literally. So both of them are literally marked here by the moving averages, and that's why I always say you should always have your micro. I call these micro support and micro resistance lines. I mean, other people will call them support and resistance lines, which you could call them support and resistance lines because they are. Like right here is a support line that I just put there because we had support and then we had resistance, and this is just a little bit of a crash course on support and resistance lines here. But yeah, you can see how it lines up with our moving average right now. That's the level that we're targeting. So that's why it's good to have those. And then the macro support and resistance like are pretty much your Fibonacci's. That's just how I do it personally. Like the macros are the Fibonacci's, and those you create your Fibonacci. Because I know a lot of people are probably wondering like, how do I do technical analysis and stuff like this? Because I always do these videos. You take it from the swing high all the way down to the swing low. So we took it from the previous all-time high all the way down to the most previous low, which is someone that we slapped right here. So it's funny how this works, and this is how you can really become accurate with your trading. So I had this Fibonacci pulled up in the video, right? I had this Fibonacci in the video, and the reason why I put it all the way down here is because it slapped it right here. The candlestick wicked all the way down here, which is not a glitch. It's usually like a huge sell off, which is signaling another sell off coming, like a large order pushed it all the way down to 0.034. So that's why I put the Fibonacci at the bottom at 0.034. And long and behold, you see, where did we bottom out at? The same level, 0.034. So we bottomed out at that same level. And yeah, now we're coming up here on Starknet. But again, 7 cents and 9 cents. Those are the two target levels for Starknet. But yeah, and then when we come over here to the 4-hour chart, it's looking good. We hit the moving average and we still continue to stay above it. As long as we stay above this 50-day moving average on the 4-hour chart, then we're good. Like on the 4-hour chart, it's just going to keep riding upwards. And as long as we keep going up with it, a lot of the times it doesn't happen like that. It might come down below it just for a little bit and then come back above it, and then like make its way there slowly but surely. So that's another possibility. But remember what I also mentioned about the percent R trend exhaustion slowly selling off, right? Same thing could happen here. All right. So we got the same risk, which is why I say target 7 cents. If we can pass if we can pass 7 cents, then target 9 cents. And also remember divergence, divergence, divergence. We're building bearish divergence, which means we're still building it. So we're still bullish and we're still going up. So you see we have this huge buying pressure here, and then we have huge selling pressure. What do you think comes in next? More big buying pressure, but it's going to be less than the previous buying pressure because this is how bearish divergence works. And then as we start diverting down the chart like that, then we'll have a little bit more to go upwards. So as you can see, it'd be like this, a pullback like how we're experiencing now. And then the next high is the next lower high. So it pushes up just a little bit more, which is why I say like 7 cents is a good area to target if you're trying to do like a short-term trade. If we can pass 7 cents, 9 cents right after that. All right. So if we can do boom, get past this, we need to go up there. So that's how we're looking at it. That's how we're looking at it. So yeah, we're building bullish divergence. So that's good. We should see a push up to 7 cents soon. But yeah, this is pretty much all I got for you guys today. Hit the like button, subscribe, all that good stuff. I had so much that I actually wanted to talk about, but I get so caught in the technical analysis that is what I focused on the whole time. But for those of you that don't know, Starknet is a privacy chain, right? It's a privacy chain. And as you can see here, they have their new Stark to Bitcoin. And that is like a private version of Bitcoin because Bitcoin is very public. So shield your balance, move funds privately, and use Bitcoin across Starknet DeFi without exposing every transaction. So that's an interesting thing. They're doing pretty good. This is their little I want to say their staking dashboard, not their staking dashboard, but their dashboard in general. And then they have a staking dashboard on their general dashboard, right? So yeah, you can go ahead and look at that. I'm not going to wait for that to load. But Starknet, this is their Twitter page right here. A few posts I wanted to go over. This one right here, which is talking about their Stark Bitcoin. So Bitcoin is the most sovereign money ever created. It is also the least private money people have ever used. Stark Bitcoin fixes that live on Starknet today. So now you can use the Stark Bitcoin. So Stark Bitcoin is private Bitcoin on Starknet. Shield your balance, send privately, unshield back to a public balance whenever you want. Shielding hides selected balances and transfers from view. It doesn't lock anything away. So this is pretty much how you can use Bitcoin privately, and Starknet is now the pioneer of that. So that's actually pretty big because I don't think even Zcash did that, and now Starknet is doing it. So this is pretty big. This is pretty big. So Starknet could be up there with Zcash, because I know the technical analysis I showed you is kind of short term, looking towards 7 cents, looking towards 9 cents. But that's how I trade. That's just how I trade. I like to get my gains and then go away, let it pull back, and then I'll get back in on the pullback. Because I'm active. I'm active in the market. Like I'm 24/7. I'm literally on my computer and I'm watching everything. I'm watching all the cryptos. I'm watching all the stocks 24/7. I'm active. And that's why I'm only looking short term because from here to 7 cents is a 50% gain. And then from here to 9 cents is a 100% gain. So that's why I'm super short term. I'm like, hey, I can take $1,000 and take it to to take it to $2,000 if we go up 100%. Take 10,000, take it to 20,000 if we go up another 100%, right? If we go up all the way from 4 cents all the way up to 10 cents, so, well, 5 cents to 10 cents, because that's 100%, right? We gotta be completely correct here. Now, anyways, moving on to the next post that I wanted to talk about here. This is another one talking about Bitcoin. Private Bitcoin is live, so they're getting Ender.fi. I don't know what Ender.fi is. Ender lets you stake Bitcoin and Stark on Starknet and receive LSTs. Okay, earning staking rewards while keeping your tokens accessible. So yeah, I'm gonna have to actually look into that. But yeah, even they're posting about it here. And as you can see, Ender's liquid staking token for Stark BTC, you'll be able to stake it on there as well on Ender. So they got a whole DeFi protocol that you really have to dive deep in, and you can obviously see that I haven't dived too deep into their protocol, but I have their charting on point. So I'm gonna watch out for Starknet a lot, even as something as like a long term play, because I can see Starknet has long term potential. So yeah, maybe I'll stop looking so short term on Starknet, because like I said, it's looking pretty nice on the long term. All right. So anyways, this is all I wanted to talk about today. Shout out to you guys. Hit the like button, subscribe, all that good stuff. Remember, I'm not a financial advisor. None of this is financial advice. Check out the link in the description for Chart Prime, or not Chart Prime, but check out the link in the description for Avantisfy, the best DeFi perps trading platform out there. And then you can check out Chart Prime as well. Best automated trading indicators inside the game. And I use Chart Prime every now and then. But like I said, the best technical analysis that you're going to do is going to be manually, because all they're going to do is, you can see they have their own moving averages here, so it's pretty much the same thing. But when you learn how to do the thing on your own, I feel like it makes you a better trader. So yeah, but Chart Prime is nice, so you can check out that as well inside of the description. So anyways, this is pretty much all I got for you guys today. For all the members, let me know in the comments what you want me to go over next. And if you want to become a member of the channel, go ahead and do that. Only $9.99 per month, and you can have me go over any project as well. So as always, I'll be back with another video.